Okay, guys, I think I'm going to start. So, can you hear me? Can everybody hear me? Perfect. Okay, I think I'm going to start. I'm not sure. So, my name is Sinesipho Maninjwa, and I'm going to be talking to you about how to solve the SME funding conundrum. So, just a brief intro in terms of that's my topic. So, I am by profession, I am an accountant, I'm a bean counter, and I've spent the past 10 years in financial services. So I have done many things in financial services, and the guys at Yoko thought that it would be a good fit for this topic. So I've spent time in commercial funding, where I worked in credit. I've also spent time in development finance. I've also spent time in private equity and spent time business development, corporate finance. So I've done quite a few roles within financial services that looks at solving the funding conundrum. So in terms of experience, I've never been the person to ask for money. I've always been the person who provides the money. So I sit on the side of the banks, the guy you as entrepreneurs will be coming to ask for money. So I've done that for businesses ranging from startups all the way to large corporates. So also in my other side hustle life, I'm on radio a few times. I talk about the business of things and anything that's related towards money. So that's who I am. So this is sort of like the things we're going to be talking about in terms of the agenda we're going to be talking about. We're first just going to define the funding conundrum for SMEs. We're then going to talk about your traditional sources of fundings, which most of you are aware of. And then we're going to talk about these alternative sources of funding, which have started coming up recently in the past few years. And then I'm going to present a solution I think is the most viable solution for entrepreneurs. So this is a nice quote I love, which is, an entrepreneur does the most with very, very little. The reason why I say that is because there's not a single entrepreneur that can comfortably say it out loud that they are secure financially from a funding perspective. Whether or not you are always raising funding, you are always talking to your bank, you're always trying to find money to make money. So you learn to do with the resources, the little resources that you can, to do the absolute most. So in terms of what is the funding conundrum, so this is where we are in SA, just from a numbers perspective. So I'm just going to run through the slide in terms of why we call it a funding conundrum. We all hear about SMEs, small business, everyone's saying small business is the biggest employers. However, small business struggles to get funding. Small business doesn't have access to funding. So in terms of where we are as a country, we need to solve this funding conundrum. And now a very, very big thing is that the guys at FinBond, which is the study I'm quoting here, 2 years ago did a study, and they looked at what are the odds of you finding funding? Well, like, what are the stats? What is the chance of you actually raising money? The odds were it's 1%. You only have 1% chance of actually raising funding as an SME. Now, it's very important to know what the definition of an SME is. In South Africa, it's anywhere between 0 to 15 million rand worth of revenue. How many people know SMEs who are making above R1 million? So you're all sitting in the same boat of 1%. Now, it's very important to contextualize that 1%. I'm noticing the room has quite a diverse group of people. Within that 1%, if you are black, under the age of 35, your odds are more like 0.01%. Because within the 1% of funding category, about 75% of capital goes to non-black people. But you shouldn't be shocked. This is the demographics of our country from an economic perspective. So those who have tend to attract the most funding. So if you're asking yourself, if you're a young black entrepreneur, what are the odds of you raising money in this country? The odds are 0.25%, most likely. Now, the problem is that you hear Mr. Tito Mboweni talking about we need to get SMEs, we need fourth industrial, we're putting all these billions. The truth be told is literally in the small business gap, in all the gaps we have, the funding conundrum is growing at about between 86 and 346 billion rand. If anyone has listened to the budget speech that was given a few weeks ago, you would know that we're not allocating anywhere near that. Now, you would think, okay, since we're not allocating to those, where are entrepreneurs supposed to get the funding? So in our country, if we look at the traditional sources of funding, we're going to go through the different stages within a business. So within the seed stage in the business, that is pre-revenue. You wake up, you're like, I've got an idea. I want to raise some capital. So most likely, the people that you would be able to go to, because you have no money yet, you can't borrow, because there's no money to speak of. So you can't borrow, so borrowing is not an option. So you think, okay, let me go to venture capital. I'm pretty sure some of you guys have been hearing some of these guys talk about, oh my God, let's go to venture capital. You're in Joburg, there are very few VCs. VCs from a funding perspective, if you look at the latest Savka report, are about under 5 billion. So we're at 86 is our funding shortfall, 5 billion, they have total capital available. And they're not even getting allocated the most. So most likely you'd have to fund yourself, most likely. So the chances are, the probability of you getting the funding is less than 1%. So we talked about the full funding necessary being 1%. At this stage, it's less than 1% because you're still at idea stage. Now you move from idea stage, you're talking to people, you're making traction. You're in early stage. Again, you ask yourself, who can I go to for money? Now, again, in this country, there's quite a few grants that are available for early stage. But yet again, those grants are selective, almost impossible to get. The paperwork alone will take you a year to complete. So again, less than 1%. You can think venture capital again, but again, we've got the same problem. So most likely, you'd have to fund yourself. And you can also try doing the competition thing. So mates of mine are one of a mate of mine is a founder of Pineapple. They got lucky in a competition and they got 20 bar. But again, what are the odds of that? And they worked hard, and bear in mind, they got 20 bar. So you think, okay, there's entrepreneurship competitions, you win 10,000 Rand here. Again, the time it takes to complete the application is less time you're spending on your actual business. The odds of you being able to, because it's a random draw, pretty much, since I've judged a few entrepreneurship competitions, I can tell you this without even flinching, no one is looking at all the applications. And the person who does the first round of selecting is usually some student or some intern that's just paging through. So again, your odds of getting the funding in these competitions, it's by miracle. It's literally a miracle. So yeah, that doesn't work. Now we go to another stage. We're not growth stage. We're making money now. We're progressing. Again, venture capital is still an option for you. But again, in this country, unless you're in IT, the chance of you starting a business outside of the IT sector, venture capital in this country, not an option. Not an option. You could try the development funding organizations. I used to work at NEF. I know everybody hates government funding in institutions. They're great because of one little thing. They don't require you to have a balance sheet. But think about it this way. The NEF, last time I checked, they only allocated about 500 million. The IDC will only look at you if you are above R1 million, and they only look at industrial sectors. The DBSA, unless you're doing a major infrastructure project, they're not calling you. PIC, because it manages pension money, they only do mature businesses. So you might think local. So in Joburg, you've got the Gauteng Development Agency. Again, they're sector specific, and they require you to be within Gauteng, and most likely, even though you're at the growth stage of business, they want you to have certain, what you would call developmental targets or mandates, i.e., you need to be employing lots of people. But you're a small business. How many small businesses can employ more than 10 people? So you can try. I'm not saying don't go, but again, the chances of you getting the funding, still they've improved, but still close to nowhere. So then we had expansion stage. So expansion stage, you're making money, you've stabilized, you now have lights in your house, you no longer have to worry about rent. But you want to grow to the next level. Our economy in this country, as you know, we just got revisions going at 0.4%. No bank is giving expansion capital because they think they're going to lose it. If you look at, because you're now susceptible to macroeconomic factors. So things like your GDP growth, they're like, hey, South Africa, GDP, you've got COVID-19, you've got AI. Again, your chances have improved, But most likely, no bank will give you additional capital to fund expansion because the chances of you losing it all in this economic downturn are very, very, very high. Now you're at maturity stage. Maturity stage. Things are happening, you know, you're making your money. This is when any bank will look at you. Because you've got a stable earnings, you've probably built some assets. You know, it looks better now. Now a bank will look at you. You now can even get private capital. You can get venture capital will also look at you at this stage. The problem in South Africa is that we don't have venture capital in South Africa. What I mean is that our venture capital most likes their business de-risked. So no one is willing to put their skin in the game. Very few people are. I'm not saying it's impossible. I'm just saying the odds of you being able to pull it off are close to nothing. And you know why I say that? I say that because I come across lots of entrepreneurs. When I used to work at FNB, actually I used to work at FNB, credit, someone would come, no, I've got this idea, you know, and I'm like thinking to myself, you don't have balance sheet, you can't talk to me. Banks are only interested in mature businesses, and they like businesses with stable cash flow. Unless you can demonstrate all those three things, they don't want to talk to you. They might give you a short-term facility, but you need real capital. Let no one lie to you. Funding is the most important thing in any business. Someone will be like, no, you need to have passion, you need to just start. No, they're lying to you. Capital is an enabler of success, and it is a catalyst for growth. Simple example, I'll use the guys here at Yoko. Trust and believe, as brilliant as all four of them are, if they didn't have access to the funding and the capital that they got, when they got it, we would not be here. They were able to get it. They were able to get it. And why were they able to get it? We're going to have honest conversations about funding here. They were able to get it because of who they are. Social capital and something I like to call, they all had a safety net. No one was going to get kicked out. No one was going to be homeless. They were all professionals. They started a business. Some could move back home if things got tough, but some could rely on their spouses, but no one was going to be homeless. And I think we need to be honest about those conversations and the fact that as entrepreneurs looking to source funding, if you're looking for an external provider of capital, unless you have a safety net or social capital to know who to ask, to know who to go to, your odds of getting any form of funding is non-existent. So I like to use this slide, which is how us banks look at it. So what we do is that we look at each stage. You see, 1, we're progressing, no chance. 2, we make a little bit of progress. 3, we go down again. 4, 5, it gets easier. Now, as you're passing through each gate, you have de-risked your business for any external provider of capital. That is why your odds improve. It's because you've de-risked your business. And I talk about de-risking your business because for us in banking world and in funding world, we want you to be de-risked. We don't want to take any form of risk. And the reason being is that regardless of where you are in the world, the failure rate for SMEs sits at about 90%. So if you've survived your first year, we like you. If you've survived your first 3 years, we like you even more. If you've gone to 5 years, we want to bond with you now, simply because you've survived. Not because you've done anything spectacular, but you've survived, you've de-risked, and you've shown that your business has legs. So that's sort of like how we have. So like I said before, based on it is likely that anybody looking to start their own funding, they need to look at other forms. We need to be creative with our forms of funding, and we also need to think about, even with the support of government, and bear in mind, our government does a lot. I'm not knocking anyone who thinks DFIs are a problem. Our government actually does a whole lot for entrepreneurs. Unfortunately, they have got scarce capital, and it's very difficult to access it. But they do a lot, and we should take pride in that. It's just that they don't have the budget. The banks have the money, but they won't risk it. Venture capital, guys, if you're looking, I'm looking at venture capital funds. These guys want IRRs of 35%. So effectively, they want your business to triple every 3 years for it to make sense for them. So if you can't show that, they're not interested either. So there is capital available. It's just that as an SME, you don't fit the tick boxes that are required to access that capital. which is why the funding rate is only 1%. Now, because of that, there's been a few in the new modern era of technology. There have been different sources of funding. A little thing called crowdfunding has started to come up. Crowdfunding is based on the premise of, if I can convince other people to buy into my dream, then, and them not expecting little to no financial return, it is one of the most popular forms of funding, and it's been growing in the past 2 to 3 years. However, these are the different crowdfunders. You've got Thunder Fund, Uprise Africa, Jumpstarter. The thing with them is, as much as they're a great source of funding, because for the entrepreneur itself, it helps you build a customer base as well. Crowdfunding does 2 things. Helps access to funding and gives you access to market being your customer. Because someone feels like they'll be giving money, they're far away, they feel an affinity towards your business. And they want to support it. So it's a great, it's premised on Ubuntu, and it actually, you know, us being in Africa, you know, there is some merit in it. However, the problem with crowdfunding is that your story needs to be compelling. So you're an entrepreneur, your story needs to be compelling. It's based effectively on public relations, good public relations. You need to be digging within the purse straps. You need to be tugging at people's heartstrings. That's how people raise funding within crowdfunding. Also, a lot of the guys who do the provisions of pricing, like Uprise Africa, they reject close to 90% of the applications that they receive. So again, you're still in the banking situation, but your odds are better because the money is cheap. It's part of the cheapest sources of funding. And you know, you've got a compelling business proposition, you know you're tugging at the heartstrings, but again, getting access to it is quite challenging. And it requires a significant social media following for it to work. It's built on a network effect. So if enough people care about it, you'll be able to raise your funding target. So, second step, second form of funding. This is the most likely form of funding that most SMEs use, which is bootstrapping. So I was in the main hall, and I actually realized a lot of people don't know what bootstrapping actually means. Bootstrapping is simply spending your own money on your business until someone else is willing to spend money. It's quite simple. A lot of famous bootstrappers, you know the guy, Steve Jobs, bootstrapped. Jeff, bootstrapped. By the time he had left to go full-time into, Jeff was making millions on Wall Street. He used to be in hedge funds. By the time he moved to Amazon full-time, it was making money. He wasn't going to be poor. He was going to be richer because the opportunity cost for him was that high. That's the benefit of bootstrapping. You're doing it on your own terms. However, the problem with bootstrapping is that you are slower. Because you can't full-time dedicate yourself to your business, you're effectively only working on it about maybe, let's say, 10 hours a week versus someone else who's working at 60 hours a week. So from an efficiency and scale perspective, you are not getting better. It's going to take you longer, but it's the most risk-free way of actually growing your business. So I like to do it, I think of it starts of this way. This is how I think about it. You started with your own money, your customers pay you, and then someone else pays you. Because the great thing about bootstrapping is that it is the only form of funding in which you are 100% accountable to yourself, where the returns are completely based to yourself, and it's the one that allows you to fail without destroying your life. It is literally the most efficient form of funding because you are dependent on yourself. So you need to decide, if I'm going to be spending 10,000 Rand of my own money in my own business, I best get a return for it. So it makes you work harder because every cent you spend is taking money out from your personal budget. So you're more careful. The thing with me is that I've realized with entrepreneurs, it is far easier to spend the bank's money than your own money. When you're spending the bank's money, entrepreneurs will be like, they'll give us a business plan. They're like, we want offices in Sandton or Rosebank. We want to be at WeWork. I'm like, why? Why? Why aren't you using meeting rooms? They're like, no, but we need to have offices. It's because I'm paying for it. That's why you have these ambitions. If it was your own money, you would think twice. These days, you can rent a conference room if you need meetings. The idea of having offices, I'm not sold on it as a concept. So it's accountable because you learn every single cent matters. Every single cent matters, and it also, I think, it makes you stronger The other one is angel investors. So angel investors is not a new concept, but it's been more formalized in the past 3 to 5 years. You've got lots of angel investors clubs. Angel investors clubs is literally rich people who want to help little kiddies start their dreams. Really, it's as simple as that. So it's become more formalized in the past 2 to 3 years, where you've got different organizations like Josie has an angel network. You've got one in Cape Town, and you've got 1 or 2 in other parts of the country. But it's become more formalized now. But basically, it is people who have nothing better to do with their money. Because, like I said, entrepreneurs, there's a high failure rate. It's literally someone who's like, you know what, I've got 10 million rand, I'm not going to miss it, I can lose it. So they're like, I will back you as the entrepreneur. Great thing about angel net investors is that they usually come with a great form of social capital, in that they are established and they can help facilitate a lot of introductions that you, as a young entrepreneur, may not be able to access. So that's the benefit. However, if you want to access an angel network, and this is just me being honest, you need to have gone to 4 schools in SA. Any school with the Saints, King David. In PMB, Hilton's a very good school. It depends on your schools. UCT is also a very good school. It literally is dependent on who you went to school with. Completely. And it is nice because they don't expect a return immediately and they can miss the money. It's people who can miss the money. So how we define angel investors, because I have some of them in my portfolio, we define them as people with 100 million rand worth of investable cash at a minimum chilling. That's excluding housing, bonds. This is money that they can effectively today, they can lose, and they'll still be in the private jet tomorrow. That's how we define them. Because it has to be at that level. I know a lot of people are laughing, but it has to be. It has to, because remember, entrepreneurship is hard. SMEs fail. You need someone who won't cry about the money they're going to give you. So they're very, very great, but it's difficult to access them. And like I said, it depends purely on what school you went to. More likely than not, and interesting fact, one of the initial investors of Yoko was an angel investor. Schools, guys, who you are, social capital, it's a very important thing in this. So now we've talked about the traditional, we've also talked about the alternatives, but now what is the solution? We know we need to create more SMEs in this country, but we also need to support them, and we need to make sure that they have the funding to scale. Because the idea is that we shouldn't be looking to create SMEs. We should be looking to create large corporates. That should be our job. Our job is we want them to move from SME to medium-sized to large. We shouldn't be wanting to keep them in a perpetual state of smallness. So therefore, they require capital. And we need to be honest about what are the capital forms available, and we need to think of doing it differently and looking at different sources of funding and actually looking at how do we change the funding ecosystem as it stands for entrepreneurs right now. Because as it stands for right now, we can only say effectively it doesn't work. It is not there to help entrepreneurs get access. It is there to help people to be made at a small level. And always, we have a term we like to call survivalist entrepreneurs, where there are lots of new businesses being created, but they are survivalists in that what they earn, they spend right out. That is not, for me, a solution we need to be going. We need to be talking about scale, because that is the only way we're going to solve the economic employment structural deficiencies within our economy. That is the only way. We need to be looking at not just, people always brag. I think when we talk about our government, and especially Minister Tito Mboweni and all these funding issues, like, we have so many SMEs. No. How many of them have moved? We want to create more. We need to be talking about scale, and the only way you can get scale is through capital. And that is where we need to take it forward to. So what is the solution? So for me, it's a combination of a few things. I'm a fan of bootstrapping. But bootstrapping can only get you so far. Because like I said before, you are slower. 10 hours versus 60 hours. Malcolm Gladwell told us it's all about time. The time you can dedicate to your business. So I'm a believer in that you need to look at an ecosystem approach. And a key stakeholder of that is government. So I'm not sure if you guys are aware. The government, through the BEE Act, makes companies give 1% of their net profit after tax they need to spend at enterprise supply development. What that means is that they need to give money away to their supply chain for them to grow. I can tell you now, because enterprise supply is one of my specialities, most companies don't allocate that money. It usually sits, it always rolls over. Why is this important? Because a little thing called BEE, enterprise supply development, gives the most points out of any of the categories within your BEE legislation, and it's the one that companies lack the most in, that they're not allocating. So this, for me, needs to go center point in our legislation. There needs to be punitive measures for companies not spending the money. And that goes towards everyone. Another thing is that your own resources, also your customers. I am a fan of crowdfunding, but I do believe that we need to change the model of crowdfunding in that your customers need to become partners in your business. Your customer, essentially, I think someone said it quite nicely, your customer is your brand ambassador, they are your investor, they are your absolute everything, and everything needs to center around them. So they're a key source of any entrepreneur, and you need to make them love you. So I'll make the very simple example where I was chatting to some of the guys. If you understand Yoko's business model, there's nothing new about Yoko's business model. There's absolutely nothing new. The only difference is that they were servicing a segment that banks just choose not to talk to. But there was nothing new. That means that if your customer-centric model is a key source of your funding chain, because if your customers love you, other people will love you because they will be the first people to advocate for you. And they're free advertising. Another thing that I think is very, very, very important is that commercial banks actually need to step to this part. As you know, I'm not sure if someone told you, you should have seen a report that was commissioned by Intellidex, and it basically said that in the balance sheet of most companies, they have about 500 billion sitting. Obviously, that has declined. Am I done? Sorry. Yeah. They have 500 billion worth of cash sitting, meaning our own companies in the JSE, these are the companies in the Johannesburg Stock Exchange, they have empty, lazy balance sheets, meaning that they're not willing to invest. If they're not willing to invest, that's another punitive measure that we need to legislate. They need to spend. They need to be investing. Unfortunately, a lot of them have gone overseas, and as you know, that hasn't gone well. Sasol, all those billions. And I talk about Sasol, I like to use Sasol as an example. Sasol, instead of upgrading Sasolburg and Secunda facility, went to spend over 100 billion rand, still and counting. That's what SA corporates have done. So for me, they're in a key stakeholder, but they need to invest here. They need to provide the capital. Like I said, there needs to be punitive measures because the way that they're structured right now, so if they spend, the banks will follow. Because banks, like I said, we like stable cash flow. So if the corporate spends and underwrites the SME, we're going to give the SME money because it's underwritten by here. That means they need to procure from SMEs. They need to invest in SMEs, things that they don't do, which will solve all our problems. So interesting stats about, if you look at Malaysia and other countries like Germany, their country, from a procurement perspective, large corporates procure up to 75% of their goods from SMEs. In South Africa, we have the inverse. That's why we've got high unemployment. Quite simple, is that they don't procure from SMEs, they procure from other large corporates. Hence, they're keeping the capital circulating around themselves. And that is that's a key problem. That's why I call it sort of the solution is an ecosystem that we need to restructure and create punitive measures for lack of enforcement. And so that's what I think solving the funding conundrum is.